Coin traders, what is going on? Thanks for joining me once again for the show, looking at Algorand once again, ALGO on that ticker. So a lot of nice upside traction here, but rejecting just below 1030 and finally now losing the 10-cent psychological, but actually finding a little bit of stabilization on top of some previous levels of closing resistance. So going to be looking all at this chart from the longer term, mostly the daily, 2-day, 4-day, and also the weekly, because we know a lot of the short-term moves are just noise in the longer scheme of things, which is why we do like focusing on the longer-term charts right now, especially given these market conditions. It is all about the longer-term trends. But yeah, so plenty to go over today in the show when we talk about ALGO on that ticker Algorand. So if you do like this kind of show and this type of content, would appreciate hitting the thumbs up, like, and subscribe if you have not done so just yet. And so, yeah, do want to dive on into this daily because one of the things that was extremely great and very apparent was just how much reliance we have had recently on these exponential moving averages. And so why do I say that? Well, if we actually look at the current, specifically, let's start out with the 50. You can see that we were looking at big period of resistance on this 50. And if we actually zoom out as well, we did see previous resistance showing rejection from this 50. So after multiple attempts previously, finally saw enough strength to run up, reject from the 50, and then once again, rejection from the 50, before finally seeing this very nice candle on the 22nd to actually see a break and a close. And since we're talking about moving averages as well, you can see a very nice defense of support. So you can see the long lower shadow, or not that long, but lower shadow actually showed selling pressure, bulls buying the dip, confirming support on top of these 12 and 26 exponential moving averages. So right now, current price is actually looking to find support on top of this 26 as well. Currently, we're looking at the 26 being at 9.75 cents. So unfortunately, despite finding a lot of support on the 12 period, the most recent daily candle that closed actually saw a close below the 12. So that's why we are relying on the 26. So if that can hold, that'll still be a pretty good sign, especially confirming a higher low on top of the previous low, since we are looking at higher lows on this stair-stepping type pattern of this day. Now, one of the things over on Twitter that we were looking at was a break of the 9.8 cent resistance line. And once again, if you're not following me over on Twitter, drop me a follow at coin_trades is the handle over there, because I do post a lot of updates and things like that. So looking forward to getting in touch with everyone and having conversations with everyone over on Twitter or X or whatever you want to still call it. So for this, I actually want to flip over into the 2-day chart, because this is where we really saw 980 as being an extremely big level of closing resistance. So horizontal price line drawn right now at 980. So as you can see, after 17th of August, we saw a complete rejection from this overall line until the recent candle for the 22nd closed, but did see an immediate rejection, especially just on top of this 26 exponential moving average. And so now, once again, looking at prices being below that level. But like we said, we're still looking at higher lows. And despite this being a pretty big level of closing resistance, do know that it is a lot weaker now since we've already seen a close on top of it. So like we mentioned, we have seen rejection, especially 3 candles in a row from this 26 period exponential moving average. And zooming out, you can see how price got stuck up in between the 12 and 26 multiple times. So we've never seen a break of it so far, except for back at the middle of April, which you can see there was complete lack of follow through, and that's when we did see a lot more downside pressure from there. So one of the things we're extremely looking at is just whether or not the bulls will be able to maintain support on top of this 12 period exponential moving average, break this 980 once again, and actually see a run up and a break and close on top of the 26, which currently is at 10.02. So that does align pretty good with where the candle will probably sit along with the 10-cent psychological price level. So that's going to be another big thing for bulls to overcome, because we are going to have the 10-cent psychological level as well as this 26 period exponential moving average, which has been extreme points of resistance previously for about the last 5 months. So definitely got a big zone of resistance up overhead. And on top of that, it's actually going to be another bigger zone, because our last point of closing support was actually at 958. And so even breaking the 10-cent psychological as well as the 26 EMA isn't necessarily going to send the price up, but it being able to continue to maintain higher lows of support is really going to help the bulls establish that higher upside. So right now we're looking at a upper price level consistently of about 1030. So this kind of just highlights how massive this resistance zone is going to be from about 980 to up overhead to about 1058. And so that's kind of another reason why we saw so much stagnation on this point. And now on that note too, let's actually go ahead and pull up the volume, because if we take a look at the volume, you can see that we're not necessarily looking at a lot of continued upside in terms of increasing a bullish volume. But overall, for about the past month or so, this is about the lowest that we've seen the trading volume here on Algorand in a long time. So although not necessarily in the immediate vicinity of a huge rally and pump, one of the best ideal scenarios is probably actually going to stick to a little bit more accumulation in this overall zone. If we can sit in this zone from about 980 up to about 1060, that should hopefully confirm and establish a little bit more of that longer term floor and accumulation period. And then once we actually do see a little bit more increased volume, that would likely be able to push the price up, as well as breaking this 50-period exponential moving average. So one of the great things on the shorter term exponential moving averages as well is that we've actually seen a tightening range between the 12 and 26, which is a good sign, because on the downside, when these things start to get far apart, we know that at some point they do have to eventually pinch and squeeze, which is what they're doing now. And likely in that instance, that's a trigger of a lot of volatility to the upside. All right, so like we mentioned, going to be looking at the 4-day chart. Have been liking the 4-day a lot more lately as well. And on this chart, as you can see, reliance on the exponential moving average again, because we've had 3 days or 3 bars effectively of rejection. So obviously looking left, big periods of rejection from this 12 period as well. And then looking farther left, this big point of upside that we actually had breaking the exponential moving averages before back in April are now getting stuck up at the 26. So that's why we're going to look at this as being another level that's extremely relevant as well. And for that, current rate is 11.16. So that still sits a lot higher above the 1058 resistance line. So that's another reason that we think even if we do actually see a break of this 12-period exponential moving average, we're actually going to see a lot of resistance right in this overall zone. So still looking at a long period of time to actually be able to confirm stronger growth and upside, but overall, we're not necessarily thinking that the crypto space is going to be that positive, mostly due to a lot of other negative economic factors worldwide right now in this current market environment. But anyway, yeah, more specifically on this 4-day chart, do want to zoom in here because we're looking at inside bars on this chart. So once again, inside bars is where the previous bar has a higher high and a lower low than the following bar. So as you can see, this next bar, prices fit inside the previous bar, and right now we're currently working with about almost the full 4 days left on this candle. So we just had a close of this 4-day. Still not much to write home about in terms of volume though, as you can see. And especially with a lot of these big upside wicks compared to small bodies on these candles showing a lot of selling pressure, confirming the reliance of a strong resistance on this 12-period exponential moving average. Now, besides the exponential moving averages for resistance, I want to talk about a very nice downtrend resistance line that we're looking at confirming multiple tests on this price. So starting back in the middle of June, saw rejections from all of these price levels, rejection just above the 12 period. And then more recently looking at rejections again. So if we can actually get over this hump, break the 1055, 10 to 1058 resistance line as well. But obviously first looking at the 12-period EMA at 989, then that would be an extremely good and bullish sign breaking through so much overhead resistance. But we also know that overhead resistance, especially given multiple reasons for it, including the trend line, exponential moving averages, as well as price lines. And then even in fact, if we turn on VPVR, volume profile visible range, you can see how center point of mass aligns just over where we drew our price point at 1058. So coming in right around the 11-cent mark. So a ton of overhead resistance based on so many factors. And so with such low volume, we're most optimistically going to be relying on a little bit more longer term accumulation period, realistically sitting between the 11 cent and about the 10 cent, or basically about where we're sitting right now. So biggest worry right now is on this 4-day chart not being able to see a close on top of this 12-period exponential moving average, because ultimately that would confirm establishment of this being a very reliable resistance point, in which case we would actually start to see a price pullback once again, realistically testing down to about 1050. And then below that, we would be looking down to our 4-day close for about 910 support. You want to flip over into the weekly really quick just to talk about this overall volume, because as we can see, we've actually seen week over week decreasing volume, obviously with the exception of the week of 14 August on the huge flush and sell-off, but otherwise huge complete week over week decreasing volume for all volume here. So really to see about 11 weeks or so just continuous decrease in sell pressure. And like we said, we're actually looking at the smallest amount of volume that we've seen in a very long time. In fact, we actually have to zoom all the way out back into 2020 to see the minimal amount of volume, but otherwise it's been the most minimal amount of bullish volume and basically all volume so far, period. Since, for about the last 3 years or so, since back in September of 2020 and obviously the spring and summer of 2020 as well. So definitely have to be mindful of that, but also with decrease in buying volume also comes a decrease in selling volume as well. So that's another reason why probably price is just going to be pretty stagnant most overall here. And so actually want to flip over into the 12-hour chart here before we go ahead and wrap up, because this is a very nice chart to be looking at, especially when we talk about the shorter term. So one of the big things, like we always talk about, reliance on the exponential moving averages. So clear support right now trying to be formed on top of this 50-period exponential moving average. So if we go ahead and turn off the 12 and 26, you can just see that the price right now has already established one test and now working on the second test, especially after just closing a 12-hour candle, looking on the current, trying to form closing support on top of this 50-period EMA, currently at 9.73 cents. So price level support right now down to about 970. So looking left on the initial break of about the 980 level, did retrace to about 970. So that's going to be the new point of closing support, which we are currently maintaining, especially on top of 50-period EMA. Upside resistance overhead for the close, we're looking at 1021, and for price going to be about 1035. So very nice zone to be in and still maintaining a little bit of that longer term trend, especially after coming out of a little bit of a consolidation pattern. Broke it bearish, but like we said, are looking on the longer term charts, which we're still holding critical key longer term support defenses. So 970 to 980 is going to be a very nice zone to be able to maintain for the longer term. Ideally running up to break the 10-cent psychological again, which would put a lot of upside pressure on this upside zone between 1020 and 1035. So my expectation right now, especially after confirming resistance on the 50 once and two for major tests, the fact that now we have broken it and confirmed it once and now a second time as a big support point, I am expecting and hoping right now that we would be able to see a little bit more support. Losing that's actually going to be a pretty extremely bad sign, confirming a lot of these levels as a big upside resistance point once again, and then seeing a lot more downside follow through. So those are the overall current levels that we're looking at right now based on the pattern that we have been experiencing in the last couple of days and what we're anticipating and expecting coming forward and what we're going to be looking out for here on this Algorand ALGO chart. With that, though, is going to go ahead and wrap up the show for today. So if you did enjoy, please hit the thumbs up, like, and subscribe if you have not done so just yet. Do appreciate all the continued love and support. As always, does mean so much. Stay safe, take care, everyone, and I'll catch you back in the next video.